This is the Southside School of Financial Freedom watch list and market report for the week ending May 13th, 2023. Our question this week is, what is a credit crunch? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average decreased minus 0.03% on Friday and was down minus 1.11% for the week. The S&P 500 decreased minus 0.16% on Friday and was down minus 0.24% for the week. The Nasdaq decreased minus 0.35% on Friday but was up 0.4% for the week. Looking at the week, we can see that there were 5 up finishes versus 10 down finishes for the major indexes. On Monday and Wednesday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. On Tuesday, all the major indexes finished down. On Thursday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. And on Friday, all the major indexes finished down again. New unemployment claims were 264,000. Wholesale prices rose 0.2% in April. Inflation eased to 4.9%. Consumer sentiment plummeted to a 6-month low. Mortgage demand surged 5% for the week, but were 32% lower than a year ago. And the commercial real estate lending tanked to a 13-year low. New unemployment claims, wholesale prices rising, inflation easing, consumer sentiment plunging, mortgage demand surging, and commercial real estate lending tanking to a 13-year low are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a credit crunch? A credit crunch is a sudden decline in lending activity by financial institutions like banks, brought on by a general lack of funds and a fear of imminent bankruptcies. Banks become reluctant to make loans or extend credit lines because they don't believe borrowers will be able to repay loans. Credit crunches often occur during recessions, making it nearly impossible for businesses to borrow money to increase operations. And without borrowed funds, many businesses cannot expand operations, which in turn may make any recession even worse. Credit crunches usually follow a period of lenient lending like the US has been having since about 2009. In 2008, the US experienced a credit crunch, and to solve their problem, the Federal Reserve made lending very lenient. In the past year, the Fed has reversed itself and increased interest rates at the fastest pace on record. Lending is drying up, banks are failing, businesses are laying people off. Many believe that a credit crunch is looming. Is your bank still lending? Do they have the funds? Will your stocks be hurt by a credit crunch? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the US financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending May 13th, 2023. The stronger performer on the list this week was United States Natural Gas, ticker symbol UNG. It's in the second column. It was up 3.91% on Friday and increased 7.62% for the week. UNG is an ETF that invests primarily in futures contracts for natural gas, crude oil, heating oil, gasoline, and other petroleum-based fuels that are traded on the New York Mercantile Exchange and other exchanges in the US and other countries. Looking at a summary of results, you can see that UNG has decreased almost 53% year to date. I did not trade or generate cash flow from UNG this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 23.44% versus 7.62% up for SPY, a difference of 15.82%. The Southside is beating SPY by almost 16%. The cash flow generated by the Southside cash flow system for this week was 3.17% of the portfolio account value. The account value changed by minus 3.87%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.25%. Bitcoin watch. Bitcoin lost 8.7% this past week, but still appears to be on the verge of a bull market. Though it is down more than 61% from its all-time high, which was achieved in November 2021, it is up almost 62% year to date. I sold option contracts on two positions this week, one call and one put, that range from $15.34 to $65.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofffinancialfreedom.com. In order to increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are arranged in playlists levels 1, 2, and 3. They are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.